Hello and welcome back, everyone. We were assigned again on our cash secured put for last week, and the covered call expired worthless. So let's get right to tracking that and finding some new positions. So here we are at the website myatmm.com, and so the cash secured put was assigned. As you can see, the strike price on that was $44, and it closed this past Friday at $43.85. So just under the strike price. The covered call we wrote expired worthless, so we can go ahead and delete that. The cash secured put was assigned, so let's select assign from that drop down. The assignment type was stocks. We bought 100 shares. The assignment price was the strike price, which was $44. All right, so click submit there. And it generated this stock position up here. We need to go ahead and add it to the transaction history. It didn't produce that record, so let's go ahead and click save there, which will produce that record. We can go ahead and delete the put because it's no longer relevant. All right, and we're not tracking any of the fees for this demo account, so let's go ahead and move that down. Click save. So now that transaction has been retained, the stock purchase. So if we come back up to the top, we can see overall we own 300 shares. A value of $13,500 was spent, and the current stock value based off the most recent price is $13,155. So overall we have an unrealized loss of $345, but we have brought in, over the course of this entire time so far, we've brought in $1,209 in credits from selling options. All right, so our cost basis currently is $45 a share. And that's the last price up here. This weekly ATR is just the weekly average trading range. So weekly, on average, it trades somewhere, $2.73 from where the stock price is right now. Okay, and if you include our cost or our premiums that we've collected, if you include that, our cost basis is down to $40.97. So $40.97 is less than what it's currently selling at. So we're still, overall positive for this position. And we've been in this position since January of this year, so a couple months now. We're at the end of February now. All right, so what we need to do now is write another covered call. We'll be able to do 3 contracts now that we have 300 shares, and we'll be looking to do another cash secured put at the money. So let's go over there and do that now. All right, here we are in Ameritrade's Thinkorswim's paper trading account, and you can see from the cash statement, here is where we had to buy 100 shares of Marvell due to assignment from the cash secured put, so that's $4,400. So if we come over to activity and positions, you can now see we own 300 shares of Marvell. Our average price is $45 a share, which is what our cost basis showed over on the web application. So now we need to go find a cash secured put to sell at the money and a covered call to write for these 300 shares we own. All right, so if we come over to the Analyze tab, make sure Marvell is the current stock, which it is, and I have a bunch of these expanded, so let me go ahead and collapse these guys. Okay, so this coming Friday is March 3rd. So March 3rd is the current upcoming. You can see it's 5 days from now, the next weekly. So we're going to go ahead and expand that. And we do have 45 strikes showing for our covered call. Wow, is there like earnings or something? Hold on just a second, let me go find out. So yeah, we need to go ahead and find out if there's earnings. The reason why I said that is because, we've been trading this stock for a little while, and I can tell just from the last time we sold a covered call, we only got like 60 cents or 50 cents, or I think even down to 27 cents, I think we got last time. And now all of a sudden it's $1.30 for just 5 days out. That generally happens when something is happening or anticipated to happen to the stock, so they're paying a lot more in premium than normal. And if you come over to the chart, I have this chart on Marvell, and you can see, sure enough, there is earnings going to be reported and coming out on March 2nd. So now that we know that's happening on March 2nd, this expires March 3rd, so that Friday. So this makes a lot of sense as to why this is paying a lot more in premium. And just so we can see, let's go out 2 more weeks. So 45 is $1.75 the second week out, so that's 40 cents more. So there's only 40 cents difference between 2 weeks out and 5 days out, and then 15 days out, or 19 days out rather. So it just went up from here to here just about a quarter, about 35 cents or so. So the lion's share of all the premium is right here in this next coming 5 days. So that would explain why it's trading so high, which, we're cool with that. That's why we're doing covered calls at our cost basis, because we will lose no money if we get called out at all 300 of our shares at 45, because that's our cost basis currently. So let's go ahead and write the at the money cash secured put first. And that also will have additional earning privileges because of the earnings that are going to be reported here soon. So anyway, okay, so go and left click on the bid, which will, for a 43.50 strike, the spread is $1.60 to $1.68, so halfway is 4 cents, so we should be able to get 4 cents more. And we are doing one contract. We right click on this red line, confirm and send, and you can see we'll be bringing in about $163, $164 because I take a 65-cent commission out. So let's go ahead and send that. So that order is queued. And now, again, since we're at a $45 cost basis, I like to always sell at the cost basis, because my main primary focus in doing this is we're investing in this stock, or any stock for that matter, for the cash flow we can generate from it safely. And doing it this way, we will be selling it safely, or at least as safe as possible anyway. Okay, all right, so 45 strike, 5 days out, $1.32. What's the spread? $1.32 to $1.39, so that's 7 cents. So halfway is 3.5 cents. We can't get a half cent, so we'll just go up 3 cents to $1.35. One contract, just verifying this. Right click on the red line again, confirm and send, and this should pull in about $134. But hold on, I almost messed that up. We're only doing one contract. We own 300, so we can actually do 3 of these. So let's click edit. It'll bring that back. Whoops. Bring that up to 3 contracts, $1.35. Okay, let's confirm and send this one. There we go, $403 premium. Heck yeah, right? Anyway, okay, let's go ahead and click send. All right, so now those orders are queued. And again, we will have to wait till the market opens tomorrow to see if these execute. And if they do, great. If they don't, may have to adjust what premium we're seeking to lower it, or we may have to lower it a little bit, depending on if the stock comes out the gate going lower, or comes out the gate going higher. If it stays around the same, then we should probably get both of these. We'll see. And if these do execute, what are we looking at here? So that was like a 400, right? $400 and $170. So it's, what was it, 500, almost 600. Almost $600 we're looking at collecting for just 1 week, dealing with this stock. All right. We'll have to wait till tomorrow and see what plays out. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and sign up for your account today. Thanks, and I will talk to you in the next one.